You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to and hopefully watching the Financial Survival Network. I'm Kerry Lutz. It's 126.21. Well, is this the GameStop stock market? And is it all a game that is eventually going to stop? That would be ironic, wouldn't it? Well, the market's definitely changing. The leading sectors are changing. I'd like to know your thoughts. Are you taking money off the table if you've got profits? As Bernard Baruch said, you never go broke taking a profit. And maybe this is a good time. I'm not saying one way or the other. I want to know your opinion. Email us, kl@kerrylutz.com. Well, our good friend Chris Vermeulen is with us now, thetechnicaltraders.com. Chris, great to have you back. So quickly, your analysis of this GameStop stock market. Where are we here?
Yeah, well, we're getting pretty lofty in prices. We do have some pretty big mixed markets. If you look at this longer term, I still think there's higher prices to go for the SP 500, the stock market in general. I think we could go quite a bit higher. But from a short-term point of view, we are seeing lots of signs that things are starting to weaken. Some of the leading sectors are taking a bit of a pullback. They tend to pull back actually just before the stock market actually has some type of correction. So that's one thing that's starting to alert me to be cautious. The other thing is last week we started looking at the price action of bonds like the TLT ETF and the utility sector XLU. Both of those are showing signs that they're bottoming out. They're showing signs that investors are starting to put money into these defensive plays because they're worried about some weakness, and they're really starting to pop this week. So all those things kind of coming together are saying we are in for some choppy times, I think, going into February. And it's a good thing. We need the markets to take a bit more of a pause and a break if they're going to continue to go higher. Obviously, some stocks like GameStop have gone straight up, and same with Bitcoin. And what typically goes straight up is usually going to have some type of straight back down movement. So there's some definitely big volatility in these markets. You just got to know when to step aside and when to trim profits. And that's really the key.
So big volatility means the VIX, the fear index. Too early to be in the VIX?
The VIX is deadly. I gave up trading the VIX ETFs a while ago simply because I can't remember what the symbol was now. I blocked it out of my memory, but I mean, everyone was shorting it because all the hedge funds, because it was a consistent moneymaker. And once the market becomes favorable to trade it, the financial markets make it so it's banned. You're not allowed to short it. Of course, the easy trades they block and they force everyone to go into the other ETFs based around the VIX. And so that's what we did. And that was one of the VIX ETFs that blew up overnight. And it took out tons of hedge funds, hundreds of thousands of investors, just unbelievable amounts of money blew up overnight and killed a lot of businesses. So I am totally against VIX ETFs. They're deadly. You're trying to catch like a quick spike. And I mean, I don't know if the VIX is going to spike that big that it's really worth taking a stab at this point. I mean, it's nice when it goes up 50% or something like that. But I don't see there being that much fear in this market yet that we're going to see that type of spike. I need to see what kind of news starts to unfold and the type of price action we get. And we're not there yet.
So eventually all bull markets end with a bust, right? I'm not saying anything that insightful. What do you think are some of the catalytic or precipitative events that could hit this market when fear is gone and complacency reigns?
That's a good question. Yeah, I think there's going to be a point where there's just going to be enough big institutional sellers that start pulling money off the table. And once, one big institution starts unloading and then another big institution hears about it and they start lighting up their positions, I mean, it starts to create a new trend where people don't want to get stuck behind, some of the big firms unloading. I don't know what's going to spark it. I would think there will be some type of event. There's usually something that happens and we never know what it is. Every bear market, hindsight 2020, we always blame it on something after the fact. So there will be something that hits the market. But I'm not sure what that's going to be. And that's a nice thing about using technical analysis is I follow price. I don't try to guess what it is. I just try to stay as close as I can, follow these markets. Right now, the markets are saying, hey, be very cautious. We could go into a month or two sideways consolidation in the stock market. And if it does, you really don't want to be holding any stocks. You're best to step out, let the market shake itself out and get back in when it's showing signs of strength again.
Hey, one thing I've noticed is this really is the everything bull market. Real estate prices, especially here in your second favorite state, Florida, have just taken off, like up over 20% in the past 6 months. You go to these new developments and everything is selling, everything's sold out. Another cautionary signal, isn't it?
It is. I mean, when you look at small businesses, not the ones listed on the stock market, but the mom and pop shops, restaurants. I mean, here in Canada, it's just a complete annihilation. We're in like full lockdown. Stores are forced to be closed. I mean, it's been like this for weeks. There's going to be a time when the money, the big money who's got money available, and this isn't affecting them so much, when they're done, they get their fix of buying properties and buying their extra investments and all their toys so they can have a great time at home without having to travel. Eventually, I think this will fizzle out. And then we're going to get the small businesses and those owners and families, finally closing their doors, unfortunately, because they just cannot make money. And then we're going to have this big wave. If there's anything that's going to pull us down, it's going to be the mom and pop shops finally going into kind of foreclosure, closing down. And then the banks are going to be left holding, all of these small companies' debts. And then, I mean, we're going to see that eventually be the domino effect. So I by no means think we're in a raging economy. I mean, sure, things are selling, everything's sold out, prices are getting jacked up. But I think it's just a shift in the mindset of people and in changes of lives, creating people to force buying certain things. But it will eventually run out. And I think it's going to have a pretty nasty ending. But when is that? This year, next year? Who knows?
Yeah, that's always the question, isn't it? Is when does the party end? And how do you know when to get out? And we always kid ourselves. We think that we're going to have a signal, a sign from somebody or other, and it never happens, does it?
Yeah. And when you look at the real estate market, I mean, there's a lot of guys who called the real estate top, but they were 2 or 3 years early. I mean, these are big cycles and mind kind of mentality of people that has to shift. Nothing happens really that quickly. So I think a lot of us see dark times coming, but you can't pinpoint it, even though it makes sense that it should be happening. It should have happened already or be deep into place. The problem is there's always a huge delay. It takes way longer than you ever expect. So I think it's just a matter of waiting it out and not getting overextended. I mean, people are really getting overextended on mortgages and buying properties and everything at a premium. This to me is the time you should be like trimming things off and keeping your eyes open down the road when things kind of get a little softer to invest then, not now when everyone else is.
So you think raising some cash is probably a good idea?
I do. I think being still in the stock market is a good idea. You don't want to be out of it. But when it shows signs of actually rolling over to a potential another bear market and starts to collapse, you definitely need to get out. There's nothing wrong with raising cash when everything is more expensive than it's ever been before, and it's a feeding frenzy for products everywhere. That to me is a sign that, hey, it's things are long in the teeth, overpriced. So stepping out and cashing out of this, you'll probably be able to get in back in an investment at a better price later.
And that's always a good thing. Just imagine if you had sold when the markets were flashing last January and February, if you'd sold out then, let the March bottom hit and then buy back in, you could have gotten almost twice as much for your money.
Don't just survive, thrive. The Financial Survival Network.
Silver One Resources is an exploration and development company backed by strategic investors Eric Sprott and SSR Mining. At Silver One's Candelaria Mine project in Nevada, there is already a historic resource estimated at 127 million ounces of silver, which Silver One is developing and advancing. The company's Phoenix Silver project, located within the Arizona Silver Belt, is an early-stage exploration project on which native silver vein fragments have been discovered discovered near surface. One grab sample assayed an astounding 14,688 ounces per ton. Yes, that's right, ounces, not grams. Silver One has tremendous exploration potential, is extremely leveraged to the price of silver, and is cashed up and poised to increase shareholder value. Silver One trades in New York under the ticker SLVRF and in Toronto under the ticker SVE. To learn more, go to silverone.com. That's silverone.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, and that's exactly what we did. We are seeing similar signs of what we're starting to see now in the stock market, where bonds haven't really shown the same characteristics yet. They're about to, but we got into bonds. The stock market collapsed. We made like a 20% return on our bond trade while the stock market collapsed, and then we sat in cash for 2.5 months. Waiting for it to rebound and show confirmation that we're in a new uptrend. And that's the key. People don't understand that you can, when something gets weak, you just close all your positions. You do not need to hold stocks. People think you need lots of positions. They think you always need to be in. The reality is, if you step aside, let the market shake itself out, prove that it's stable and it's trending higher, that's when you get back in. And you're getting in at a time where it's pretty much going to go up from when you got in versus riding out these roller coasters. So there's, cash is king sometimes, bonds are king sometimes. You just really got to find where the money's going, or if you don't know where it's going and it doesn't make sense, you step out and go to cash. And that's what we do quite often.
Yeah, and there's really nothing wrong with that. Nobody can really argue with that. I think what many of you out there, the problem you have is you don't recognize the signals, or you fail to recognize the signals. Like, I just remember, I think it was January 16th of last year, there was a huge down day and huge volume on the S&P spiders. And, and then there was a follow-up to that, I think early February. And that was clearly the signal. There was no denying it. Might be headed for the same thing this year as well.
Yeah. And that's what a lot of people are discretionary traders. They don't have really clear rules to follow. And so I use a strategy called the best asset now strategy. So we're constantly surveying all the different sectors and assets like bonds and commodities to see where the money's flowing. And during that February crash, the stock market broke down. Really easy indicator is if the SP 500 drops below the 50-day moving average, closes below it, then really the market is not favorable to own stocks. You simply just close out your positions, wait for the market to stabilize, eventually close above the 50-day, and the 50-day's got to be sloping up as well. And that means we're back into a favorable market condition. So we closed out our positions when the SP 500 did that. I think it was the second or third day that the stock market started to pull back. It was nowhere near a market collapse yet at that point. It was just saying, hey, this is a super sharp pullback, and it closed below a critical level. We just move out. And if you don't have rules to avoid these market crashes, you're going to be left holding the bag. And then they're down so far, it just doesn't make sense to get out almost, because you're like, well, it's going to bottom any day here, and I can't get out at the bottom. So you get stuck in this terrible situation of, crap, I'm in it, but if I sell out of it, it's probably going to be the bottom.
Yeah, you get whipsawed by the market. You zig when you should zag, you zag when you should zig. And you end up following the market to the bottom. I've done it myself many.
We all have. Yeah.
So, and then in retrospect, it's so obvious what you should have done, but everybody's hindsight is 20/20, as they say. So precious metals, what's your take? They've kind of been in a sideways consolidation channel since peaking back in August, and they've kind of gone nowhere slowly.
Yeah, and they're still going nowhere, really. They were on the verge of having a rally a few weeks ago and to break out, but they got clobbered. They sold back down. They've been out of favor for months, and they're at the bottom of my pile for the best assets to be in. They're the two, like the Silver Miner Juniors ETF, SILJ, and GDX. Both of those ETFs on the gold and silver miners are the two worst assets on my list to own right now. They've just lost all their momentum. They've got a big wide range, high volatility, just a really kind of terrible trade at this point. And when you look at them long term, it's a very bullish chart still. Same with gold and silver. I like them long term, but as a short term trader, they're dead money right now. You're really just getting into something with a lot of noise, and you can't really pick a direction at this point.
All right. So dead money there. What other sectors should we be looking at? What presents the opportunities here?
Well, we're starting to see a buy signal in the technology sector. That was 3 days ago, the XLK. Now it's bottom of the pile in terms of performance for the best asset now. But if you were to break the energy sector, the whole sector into pieces, there's a whole bunch of small tech industries within that. And some of those industries are rocketing higher, like Hale, which is a EV market, electrical vehicle ETF. There's ARCW, which is like next generation energy. We're actually seeing PHO, which is a water resource ETF, starting to break out. So there's some really interesting ETFs that are coming to life. Even the solar sector gave a new buy signal, is giving one actually today, breaking to a bull flag. So there's definitely money flowing into tech, certain pockets of tech that are definitely have our interest.
All right, that's really interesting. And interest rates, more of the same? They going higher? What's your take?
Yeah, I don't know about the interest rates. I think they're just going to kind of drift around where they are for now. There's going to probably be a big shift when we see fear hit the market and bond prices rally. There'll be some type of movement there. But I mean, I just think it's kind of a dead play looking at that right now.
All right, that's interesting. And the energy sector has definitely rebounded for sure. And I'm not sure why that is. Maybe it's a vaccine play that people are going to get out of their houses once they get vaccinated and drive more and spend more. And hopefully the economy comes back. I'm not convinced, but I've been wrong about the pandemic from the beginning. I expected it to be over, honestly, in the summer. And in certain numbers, it has been. Yeah, number of cases continue to grow and escalate, but number of hospitalizations in many places are down, as well as deaths. The problem is finding the right numbers to follow. What I've witnessed myself is the hospitals have a great incentive to classify as much as they can as COVID. You could be having a lot of health issues that really aren't COVID related, but if it's in your bloodstream, you're going to be classified as a COVID patient. And we've seen the common flu, influenza, which peaks in January in Florida every year and around the country. Influenza seems to be non-existent. So take that for what it's worth. I think until a large number, maybe 20, 30 million people in the US, maybe 60 million are vaccinated, I don't think people are going to get out of the COVID bunker yet, Yeah,
I agree. I think, we need a lot more vaccine out there. I mean, I don't know how big I am on the vaccine. I've never been one for taking flu shots or anything. So I don't know how I feel, but I definitely don't want to get COVID myself. So we'll see. I'll probably be getting it because I like to travel. And a lot of places I hear you're going to have like a stamp and a passport saying I've been, injected. Let me in.
Hey, well, I've seen it myself. I know like dozens of people gotten the vaccine down here, mostly people over 65, elderly, but many, many people, like dozens, I know. And me, I'm immune for the next 3 to 6 months since I had it, but I'm waiting to see J&J's flu vaccine. That's supposedly one shot and you're done. The others, you need to do 2 shots. And, I want to see, I'll let the population be my guinea pig here, where I decide which one and when I'm going to take it.
Yeah.
That's just seems to me to make sense. But hey, if I didn't have it and I wasn't immune for the next 3 to 6 months, I might very well feel differently. Well, Chris, always a pleasure to have you on. Always interesting to get your take on things. TheTechnicalTraders.com. Just tell people how they subscribe to your site.
Sure. Yeah. TheTechnicalTraders.com. I provide a band trading strategy, which is we find the top 3 sector ETFs to trade every week, every month, depending on the market condition. And we manage those hot sectors. You just subscribe through the website. And every morning I do a pre-market video. I walk you through the markets, what's happening, why we think it's happening, where they're going, how it's going to affect our positions. And we just kind of navigate these markets with you learn while more or less you're earning money on the trades as well. So lots of explosive moves. It's exciting times for sure. This is an amazing market for trading sectors with new president and policies and COVID. I mean, the shifting of assets money between the sectors is just incredible. So it's what we want.
And it's always nice to earn while you learn.
Yeah.
That's a good thing. The link's in the show notes to this interview on Financial Survival Network. Send us your feedback, your opinion of where the markets are heading, kl@kerrylutz.com. That is the email address. We've been bombarded by spam lately. I just got a note from Google saying, you're getting hit with spam, whatever. I don't even notice it. And just go over there, sign up at financialsurvivalnetwork.com for your free newsletter. Chris, we'll talk to you again real soon. Thanks for coming on.
Yeah, thanks, Kerry. Take care.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.